Hey, hi Ashish. Good evening.
Hi, how are you doing?
I'm doing good, sir. Thank you so much for asking. How are you?
Great.
First of all, as a customer, as a customer of INDmoney, right? I'm like, this is actually, and this is off record, right? I hope nobody else is in yet, right? So I think I've been using your product for a little over a year now, right? It has evolved, and I think I'll talk more offline as well with regard to what more do I expect as a customer, right? I'm like, it is very close to where I want it to be. Not there yet, but I guess it is a very interesting thing because one, I was never a kind of market guy investing too much or things like that. But putting everything into one platform, able to see what's happening. Obviously, there are some niggles, and I understand that integrations like PF and other things becomes very very difficult, right? But still, I'm like, that's possibly an area, and a lot more. We would certainly talk about that as well as people continue to come in. So we'll maybe wait for about 2-3 minutes and then possibly let people in, right? Format, I think I wrote an email to you yesterday, right? So a couple of days back. So we'll keep that format. Largely cover the flow that we discussed, and then pick it up from there. Does that make sense?
Absolutely happy to participate today. Thanks for inviting me. Really
Awesome.
glad
So
to connect with you.
cool. So let's wait for a couple of minutes, and then we get started.
Absolutely look forward. Where are you based out of?
Yeah, I'm in Udaipur, Rajasthan. If you heard of this place.
Yeah, absolutely.
Yeah. So I'm in Udaipur, Rajasthan, headquartered here, but yeah, obviously the operations across various locations. But yeah, good to be in a small town, right? So I hope and believe you are in Gurgaon, right?
Correct.
Got it. So Ashish, good evening, and all those people who have joined in from various part of the world. Thank you so much for joining us today. It's again yet another, I think, the 10th coffee chat event that I'm hosting. We have been doing this for last 1 year, and next month we'll be kind of completing 1 year. Unfortunately, 1 month we could not do it. To give you a perspective, Ashish, coffee chat is all about having a candid conversation about some of the topics that are pretty hot, moving a lot of things across the world, India as well, and topics of interest to various people across the verticals, industries, and use cases. Uh, we started this with a very very clear objective of having enough time to discuss about a problem, a particular industry or a vertical or a disruption, and I think we have made decent progress. One of the focus areas for us that we always wanted to pick was fintech, because we have seen that the scale is humongous, and the way it is going to even grow further, I'm like, I don't know, it's going to be huge. A lot of people that I've been talking to, and there have been discussions around what more holds for us in future, particularly when we talk about say fintech as an industry, and a lot of questions around that. And even the global leaders are also looking up to India as a market. So the whole idea was to create or curate this session focusing on that, and it would be largely 45 minutes to 1 hour. We'll follow a standard course, and obviously people who are there both on LinkedIn and here on Zoom, if you have any questions, please feel free to ask, and we'll try and take as much as possible. So let's get started. Ashish, I'm a silent admirer, and I think I was telling you a while ago as well, right? So and I actually put it into one of my groups also that there'll be hardly any people living in larger town or tier 1, tier 2, tier 3 cities, if I may include, who would not have used say Go Ibibo, or in fact would not have possibly used PayU gateway for that matter, right? Redbus, I think a lot. So why don't you possibly take a minute or two and give a quick background about your love for travel, And does it still exist? I know that because you spoke about alternate to something like Ola and Uber a while ago on LinkedIn as well, and I did respond to that as well. So let's get started. A quick introduction, love for travel, and then we'll jump onto fintech.
Thanks, Kapil, for having me over. Much appreciated, and look forward to this late evening. So look, my love for travel, or in fact, any particular business or startup that I would have built, comes from my personal pain areas. And the reason, we developed GoIBibo and later on went on to acquire RedBus and become a leading hotels player on GoIBibo was because there were too many structural problems in the travel space. So if you see the way travel was purchased in the early 2000s, it was quite a broken experience. A lot of people would be needing to make phone calls to book a travel product, and hotels booking was just non-existent because it was very complex. There was a structural problem because in a country like India, which has 100,000 plus properties, which are fragmented, they are not on a live inventory engine. And what we really did was we not only built the consumer facing application, but we also invested a fair amount of energy in building the hotel facing technology and hotel facing platform, which included pricing and inventory management and ranking and reviews and so on and so forth, which basically helped us to connect bookers or travelers with hotels on a very strong system. And that's what helped us to evolve. Because at the end of the day, what are users looking at? They're looking at the best prices, they're looking at the best selection, and they're looking at a reliable booking experience. So my love for travel started when I had made a booking many years ago on a competing travel site, which is not even alive anymore. And I made a booking for a hotel in Manali. And as you know, I live in Delhi NCR, and the drive from Delhi to Manali is almost 14 hours. And I remember driving right from Delhi to Manali, starting from morning and reaching in the evening with my friends. And when I arrived at the hotel did not honor the booking. The hotel kicked me and my friends out. And that's what I realized, that like this system is completely broken. So that was one episode. The second episode for me was, and that was like pretty shocking, right? Imagine if you are traveling all the way from Delhi, you're kind of tired, right? And you want to now crash out and spend the evening with your friends and then spend the rest of the week with your friends. But here you are back on the streets, offline, hunting from one hotel to the other. So that was one problem. And I said, listen, this is a very classic problem which needs to be solved. And I actually talked about it recently, even when we looked at the cab booking experience, right? It's that failure of fulfillment, right? And it's that failure of fulfillment which really got me very inquisitive as to how should one solve the problem. What are the structural issues? Similarly, there was this issue of, I was booking a flight ticket, and as you know, a lot of our travel plans change. So how can I make a change that easily? If I am canceling, how can I get the refund easily? And I remember booking a flight ticket on another competing website, which is, of course, still present. And it took me almost 45 to 60 days to get my refund back. So long story short, as a customer, as a human being, I realized that, look, there are too many structural problems that exist in the travel space, even though it seemed as superficially that it's well penetrated, to go and build a travel platform, even though we were the 100th company. So which also meant that you need not be the first mover. You can be the 100th mover, but if you are solving some significant pain areas and problems, consumers will embrace you. So that's how the whole evolution of GoIBibo happened. We started with bus ticketing, we integrated with RedBus, and we realized that bus ticketing is again a very important market, and we acquired RedBus in 2012 and we grew it from there. So it just the whole journey was all about experiencing problems and then trying to find ways to solve the problems using technology.
Wow, amazing. I'm like, solving through technology, I think, has been the key focus area that you've had. How did pay you happen?
Yeah, similar, right? I mean, I think it's all similar. So we launched GoIBibo, and as entrepreneurs and product managers, the main thing that we look at is conversion funnel. In our business, we see, okay, if 100 people come on the first page, how many of them will check out? How many of them will, essentially make a purchase? And what we started seeing is that the bounce on the payment page is huge. The payment failures are huge. We used to use one of the legacy payment system. And essentially, we took a very hard decision to say, let's build the payment rails ourselves. Let's go and integrate with banks, and let's build the payment rails. And we first solved for GoIBibo, and it solved so beautifully that our conversion rates just jumped up by 60%.
Wow.
And then we realized that why can't we offer this solution to other third-party merchants, right? As in companies which are outside of our framework. And that's how, PayU became pretty large, because it just ensured that it could deliver better success rates. And of course, after that, there have been many players which have come in. But again, everything begins from identifying a structural problem that exists. Can we use technology to solve that structural problem?
Right. I think this is something which is very, very interesting. So when did you decide that there is something more to what you really wanted to do, and what really triggered this INDmoney problem statement being picked up and then pursued to a way wherein I'm like, what, you've raised Series D already?
Yeah, look, I mean, again, it's the same theme repeating, and could be at times monotonous for the viewers here, but personal problems, right? So if you see, where INDmoney is concerned, it's actually solving multiple problems in one go. So right from, in India, there never existed a single platform where one could really view and manage one's cash flows and finances. You would have multiple providers, and you would have to go, and even those providers won't really manage things well, right? They would just be execution engines. And what I said is that, look, at the end of the day, what is a human's financial life? A human's financial life is a P&L statement and a future cash flow. Can we simplify it, dumb it down, and put it all together automatically in a single place? So that was the first problem statement that we experienced. We said, listen, there is a user who has mutual funds, stocks, loans, credit cards, insurances, et cetera, all fragmented all over the place, with a single objective of meeting future goals. Can we bring all of this in a single place and automatically, mind you, right? And that continues to be the attempt, because unless we don't automate, I don't think it scales. Then as we went along, we realized that consumers need to diversify. And diversification means that other than enabling consumers to invest in Indian equities, Indian debt, consumers need to diversify to foreign markets. And there was no player which was really solving in a very easy way, a way to enable consumers to access a Google or a Facebook or a Tesla. And that's where we embarked upon a journey to become the pioneering platform to enable consumers to invest in all of these foreign equities. And a lot of us use these foreign brands, right? Or US brands. All of us are using the Google and the Facebook products all the time. And when we started thinking about this problem, it was not just about making it accessible, but there was a whole issue of movement of money from India to your US wallet. And again, just like the previous startups, there existed a structural problem. A lot of banks and all had not solved it. As a result, we decided to not just execute the US stock buying and selling engine, but we also executed the neobank, which enables consumers to, at zero cost, move their Indian rupees, exchange it with US dollars, and store it in the US wallet of INDmoney, and then make a purchase of an Apple or a Google or an ETF. So again, it's just the same theme is pretty simple. There has to be a problem. Problem has to be large enough. There has to be a structural problem, and the solution has to be delivered through technology. That's why it scales. And somewhat there's a bit of personal bias and selfishness that I should be able to feel the pain. I should, the wearer only knows where the shoe pinches, right? So I should be able to kind of feel what that pain is, and hence be able to relate to it, thereby working with the team to deliver a world-class solution.
Wow, I think this is very interesting. And when you talk about problem, there is another problem, or rather big elephant in the room, which is regulations, right? So what do you see, and how do you see the regulations in India particularly shaping up when it comes to digital investments, digital currency, banking, and where do you see challenges in the near future or far future?
So if your question is challenges with respect to regulation,
Yeah.
so firstly, I think the regulatory framework is evolving. I would say that our regulators, which is RBI and Securities Exchange Board of India, are very sophisticated. What they basically want is consumer protection, and they want to ensure that the consumers are well protected. The retail consumers are protected. Business should be done honestly. And second, they want that there should be no anti-money laundering happening, and there shouldn't be any identity theft happening. In that context, obviously, the framework and the context is different from all the stuff that I produced in the past, because that didn't exist in the regulatory framework. But having said that, I think, I personally welcome regulation because it gives a rule engine. But of course, I want to give a caveat that rule engine changes and evolves pretty fast. So I guess regulation in a way for platforms like us is also somewhat moot, because it's just not easily replicable. But at the same time, one needs to be able to execute in that framework. One can't just throw darts in the dark and figure out. One has to think through before executing a product release or releasing a feature. One has to obviously have this particular dimension of, okay, how does this fit into the regulatory framework? So I think regulation is evolving fast. It's welcome in my view, because it gives a framework. And more it evolves, it moves from the grays to the black and white world, which is pretty good. As players, we just need to keep, as I said, two things in mind, right? How do we ensure consumers remain protected? And how do we ensure that there are no identity thefts and no anti-money laundering? So we put the best of KYC processes in place. We, of course, ensure that all our tech is made based on the rule engine established by the regulator, or the changing rule engines from their end. So that's the way I look at it. I think as we go along, there are new aspects in this whole digital world, which creates edge cases and new kind of use cases. And that, constantly evolves through dialogue with the regulator and through various industry discussions. I don't think we should ever, as entrepreneurs, say, oh my God, regulation, and it's difficult, and it is hard, and so on and so forth. We should embrace it. We should definitely build our systems and processes with these frameworks in mind. I wouldn't treat regulation as like that the world has come to an end. I think it's a great thing that there's a framework in place, and it's the honest players which will scale. It's the honest players, and the players which are following these regulatory frameworks will become institutions.
No, I think this is really valid and good point as well. Why? Because I know, like for example, this tokenization piece, right? When it came to standardizing and saving the data of consumers largely in a centralized way. When this entire tokenization piece came in, there was a lot of noise, chaos around it. And obviously, there are reasons, good, bad, ugly. We won't talk about that. But, at the end of the day, I think the one common theme that even RBI or regulatory bodies have kept is to keep the consumer's interest at center, right? And if that's the rule, then obviously everyone else will have to fall in line. And I think same thing happened when there was a disruption in mobility, when from a radio cab we entered into a app-based taxi model, and there were changes and impact that it created in that industry as well. So I think that's something which will continue to evolve.
I mean, look, the same thing happened when I don't know what's the age profile here, but during the time when I was building up internet businesses and growing up, there was no 3D secure. There was no third party. There was no third authentication system. There was no concept of, an OTP will come and a bank page will open and you'll put your OTP there and then the transaction will go through. I remember credit card transactions would just go through. And when the regulator basically enforce that there should be 3D secure, which should basically get executed. At that time, there was a lot of hue and cry. And then it settled down. And then it took some time for consumers' behavior to change. But the good news is that the frauds absolutely reduced. And then your conversion rates that you as a company are monitoring are genuine conversion rates and not noisy. So it was a welcome change. Of course, sometimes such large changes do take behavior changing processes to happen.
Right, absolutely. So when we talk about fintech or BFSI in general as an industry, what do you think are the top disruptions that have happened so far, or you see that there are some phenomenal work being done across the globe, not just India, in this space, which has got you moving, of late?
I think the biggest, I'll talk India specifically. I think the biggest innovation that has happened in the world is in India on the UPI framework. I think I think we are way ahead of any market. So if you really look at China, the payment rails are owned by Tencent and Alibaba largely, and maybe another player. Whereas in India, the UPI rails has been put by the government, and then any of us can come and sit on top of it and can leverage it. And which means in a way, it's an open architecture. It's like the government open sourcing it, of course, with the regulation and so on and so forth. In my view, I think that's the biggest innovation, because the key to financial services is movement of money from one place to the other, and movement of the money on regulated rails. So UPI, in my view, is the biggest innovation. And now with the recent release of the UPI AutoPay is again a huge step upwards, which is going to create many more interesting use cases for financial services. So I think this is the biggest big bang innovation. I think the second thing which supports the financial services ecosystem is the KYC systems which have been put in place, right? Whether it is CKYC from CERSAI or whether it is the DigiLocker systems. I think all of these systems have made players like us to be able to produce on top of them and to be able to scale on top of these systems which have come in, which I think is a huge welcome change. Having said that, there are many other things which are right now being built, many other plumbing pipes and railroads being still put in. Account aggregators, one such. We, as a financial information platform, embraced account aggregator, but it's still slightly immature. It is still getting built up. Again, a great innovation, one of its kind in the world, which enables consumers to be able to access their bank accounts on an app like ours, and any bank account, right? So whether it is HDFC or whether it is a Kotak or an ICICI. So in my view, I think as a country, while it's highly regulated and in some cases our regulators maturer than many markets, I think there are very, very good frameworks now present for good companies to come and produce innovation on top of all of this.
No, absolutely. I think
technology needs to stabilize, become more scalable, error rates need to reduce, NSDL APIs should be better, CERSAI should be better, everything should be better, but that's evolutionary, right? I think that's an ongoing process.
Absolutely. I think very well said, because that's an ongoing journey. And once you have a framework, you can obviously improve it and get better off. Like UPI credit, right? So I'm like, once it comes into picture, I'm just wondering what would happen to the Visa and MasterCards of the world, because so far they've been just fetching or rather leveraging the power of their network, right? Everything flowing through their network. But now the moment UPI credit comes into picture, it's going to challenge the status quo a lot. That's one. Another thing is very well said on the KYC front, as the digital adoption has kind of grown significantly over the last few years. So as the need of KYC, and obviously platforms like DigiLocker, access to all these platforms have made the lives very, very easier, right? Because it takes like 70% or 80% of your consumers are on the platform straight away, right? You don't need to do multiple checks. Same way, I was actually talking to Deepak a couple of weeks back, or rather last month, right? And Deepak Tulli. And then there was a discussion again on similar disruption in health space as well, Aadhaar card coming in parallel to Aadhaar card. So a lot of work being done. And I think all of these things would also mean that the accessibility to credit for people is also going to become a lot more easier. And we are seeing already a lot of traction in that space. But with every disruption comes problem, right? And India, fortunately or unfortunately, has been known for finding out those problems, and in many cases, people also kind of taking benefits of those problems. So, what do you think? Is the framework or the industry ready to counter those kind of issues, or is it like, because this is finance, right? This is money, or is it like everybody is so cautious about going into market, disrupting, but be careful about the fact that you can lose your money?
So I don't understand the question properly, but let me try and attempt to answer. So if your question is that is there too much of rules around to disrupt? Is that the question?
No. So okay. So let me put it this way. Whenever there is a disruption, obviously that means people will experiment. Lot new products would come in. But what it also means is, as consumers, there are good consumers, there are bad consumers, right? And that's why if we look at one of the indicators in finance industry is NPAs, right? There are people who are going to take benefits of all these things that are kind of falling in place. And we have also seen in some cases wherein some of the fintechs, some of the lending platforms, they've been running after people, and that's why now RBI is again putting a guideline on how to recover money. And
okay, understood.
Yeah.
So look, I mean, I think it's a simple thing, right? So typically in financial services, you are doing two things. You're enabling consumers to save or invest. And then on the other side, you're enabling consumers to lend from you, right? Borrow, right? Basically, right? And giving money is always easier than taking money. So taking money means when INDmoney says come and book a deposit with, of course, a regulated bank at the back end, that's a harder one. Or we say come and invest on INDmoney, that's a harder one, right? Because you are expecting consumers to put their hard-earned money with the platform or have the platform facilitate that saving or deposit. But on the other hand, today's date, if you say, listen, I'm going to be supplying money, I'm going to be lending to multiple borrowers, that's of course easier because, as you know, India is credit starved, India's credit card penetration is weak, and on-demand credit is quite absent, especially new to credit and when the credit scores of people are not very healthy. And I guess at a very simple level, the country will have to go through a learning curve, just like any industry. We would see destruction of some of the assets who have been not very careful in providing lending lines to customers or lending to customers. I think from my vantage point, lending is easy, right? Giving money to people is very easy, but collecting is the game, right? Collection is the real game. And companies have to, of course, work on collection frameworks. Companies have to also ensure that they have the right data models in place to be able to lend to consumers. There will be a learning cycle. There will be, like what we say, cost of acquisition. There would be a cost of default, which some companies may build it as a part of their customer acquisition cost or build it as a part of their own school fee or learning fee. Because at the end of the day, systems can't learn till you don't run through the cycles. So there would be good and bad companies. I don't think, this is my personal view, I don't think companies can scale overnight. They can't suddenly say, I'm going to be lending to 1 lakh people this month, and next month I'll lend to 1 million people. That's just not possible. No system can scale that fast. So in lending, there's no concept of a J curve or a hockey stick, rather. There's no concept of a hockey stick that suddenly there's an inflection point. Tomorrow I lend to 1,000 people, and after a week I'm lending to 10,000 people. So companies will have to be a little conservative, and at the same time will need to bake in the models in their customer acquisition costs if they don't have the data. If they have the data, then they obviously want to leverage the data to do the right underwriting model. And just like any other forest or jungle, right? Finally, there will be fires, but those fires will kind of lead to propelling of great crops. I would call that creative destruction. So that is going to happen. That's bound to happen. And that happens in every industry. You can take telco, you can take any industry, e-commerce. There were hundreds of players, and finally 5, 6 are left. So that's bound to happen. My only point out here is that companies will need to be conservative here. There is absolutely no magic formula, because obviously if you lend, let's say 100 rupees, and let's say you make a spread of X percentage, you can easily make that 100 rupees 10,000, because as I said, giving money is damn easy. Your revenue line looks very pretty, but after 2.5, 3 years, when the pack of cards fall, it's going to look very ugly. So there would be some companies who will do this in a disciplined manner, and many companies will face some kind of a destruction. We've seen this in other markets also. So long story short, you got to do it in a very conservative manner. You got to use data. You got to bake it up, and there is no way to get rich fast on this game.
Interesting, very interesting. You spoke about people, looking to invest, in global stocks, right? Talking about Google, Apple, whatnot. So, with regard to INDmoney, what is your experience? Can you complement with some data sets in terms of how are people investing in the US market from India? What are the trends looking like? What is your finding from whatever experience you have had on the platform in terms of the way people are looking at investment, as a way to create and aggregate wealth?
Yeah, so I think very simple. Typically, let's say people have 100 rupees of corpus. They invest about anything from 5 to 20 rupees in global equities. One of the things that we as a platform encourage very aggressively is a systematic way to invest. I think one of the things that I discovered while building this company is that you can never time the market. Systematic investment plan is such a beautiful instrument, and such a great wonder. I mean, something which is so simple yet great wonder, which is why we have switched on systematic investment plan for US stocks, where people can easily start a SIP for a S&P 500 ETF, or for an Apple or a Google, etc., etc. And that's how they do it systematically. But typically, right now, the behavior is very simple. Anything from 5 to 20% of their corpus, they would like to deploy to foreign US equities, which helps them to diversify, which also helps them to take advantage of the INR and USD exchange. And essentially, they typically put their money behind some of these blue chips, which compound over a period of time. And they benefit from these forces. And, they also clearly have an emotional connect, because a lot of them are using these products and brands. Because a lot of investments we do otherwise, we may not even have any emotional connect, because there could be a lot of industrial products or products that we may not be using. And those are the advantages people get. So it's a mix of a dopamine effect, and at the same time, the need to compound their monies.
Interesting. Pretty cool. So, moving next, just curious to understand, when it comes to making money or floating models, right? I've been a customer of INDmoney myself. I haven't seen you guys charging me anything yet, right? But still, I'm on your platform. When I go and make some investments, I've done a few through the platform. And obviously, as you said, it's largely in systematic investment plans only. If I look at that, I'm like, how are you making money? Wherein you say that I don't make money on even the SIPPs, because I keep getting reminders saying, hey, you know what, Kapil, your this particular plan or this SIP is going through a broker, and there is this much money that you're losing. Why don't you go it for a direct growth, free, all of that? But then I don't pay you.
Yeah. No, this is a great question. So, Kapil, for us, the hypothesis is very simple. And the hypothesis is that people in this country on INDmoney should not pay commissions. And we should and have monetized through other sources, right? Whether it is ensuring that the person is covering his goals and getting a insurance plan from us, which is again pretty honest, or whether it is a person buying a prime plan from us, or a person buying, let's say, an instant remittance and instant redemption kind of features on our platform, which are paid. So the way we look at it is that investments should be zero, because at the end of the day, if let's say anyone invests 100 rupees, and if that person pays, let's say, at an average a brokerage of 1%, that person is not only paying 1% brokerage, he's also paying the compounding cost of it. And that just hurts, which is why strategically what we've said is we want to keep investment brokerages zero, at least till now. That's our strategy, right? And we want to monetize through other services that we provide to the consumers. And of course, lending is also coming, because lending is a important model. And the good thing is that we have a lot of good data points to be able to do it in a proper way and conservatively. So that's how we look at our model, very clearly and very simplistically and very transparently.
Awesome, because I was wondering, and I did speak to a couple of people on your side to try and find out, how are you, going to make money if you are providing, say, for example, there was a service which I think still is available at no cost, wherein you can talk to your wealth advisor once in a while, and that person can possibly give you views from his or her experience in terms of this is where you might want to look at, and obviously at a certain level and limit, and then you start providing chargeable plans. So what I see largely is through insurance, through some plans, and then also looking at...
I mean, actually, if you really look at it, right, it's not too much of a puzzle. So if you really look at any business has a business model.
Yeah.
And that business model per se does not go through a disruption. Or seldom it goes through a disruption. Like e-commerce has a business model, commissions, right? Similarly, if you look at the core business model of broad-based financial services platforms, it is net interest margin. That is, and then there are some fee-based services, right? That's the core. 80% comes from net interest margin and 20% comes from fee-based, right? And let's say even if these broad-based financial services have brokerage as one of their business models, it's usually a very small percentage of their overall scheme of things. Look at HDFC, for example, right? HDFC is the bank, and then HDFC also has HDFC Securities, right? So, so I don't think the core business model is going through any disruption. It's just that in the business model, you can say that certain lines for me are zero, right? While I monetize through certain other lines, right? That's what you're saying. Like, for example, Amazon can start saying from tomorrow that, listen, mobile phones are zero commissions, right, on my platform, right? But it's still, the business model is not going through a disruption. It's still that Amazon is going to make a margin on a sale of a product, right, at a weighted average level.
No, absolutely. I think this makes sense. So looking forward to some more stuff coming on INDmoney. Before we move on, let's look at a couple of questions that we've got. Chiran has asked, most of the people think borrowing money in India is not good. How this mindset can be changed?
Yeah, I think so simple thing is that the mathematics, a person cannot do math. So what I learned actually is in finance, doing mental mathematics is very hard, because everything has a concept of compounding, and the values kind of look very different what they are today and then tomorrow. You can't do the mental math. You can't quickly also pick up an Excel and do it, right? So, for example, if let's say there is a user, and a user is sitting on a credit card bill of 50,000 rupees or 1 lakh rupees, right? But that user incurred that 1 lakh rupees because of emergency. And this user, now is unable to pay that. So the user is losing almost 37% annually for it. Now, this user, if he's a good credit score user, if he were to basically take a lending line and was to borrow, he'll be able to save a lot of, right? He may get the loan at 12 to 13%, right? And he'll be able to save. And now demonstration and depiction of this mathematics is very hard. We do this very beautifully when we say, hey, you are on a commission loaded mutual fund. Why don't you move to commission free mutual funds? You can save this kind of commission over the next period, right? So it's that depiction of telling the user what's the benefit. So I'll take another use case. A user is there and he suddenly needs money, right? Because either he wants to go for a holiday or whatever, and this guy has invested and he goes and says, let me sell. So he presses the sell button. Now, if he was to make, if a system was to articulate that this person by selling or by redeeming his holdings, he will be incurring X short-term capital gains tax. He may also be incurring exit loads. But if we were to do maths to him and say, listen, you can take a short-term lending line that will help you save X rupees, then the consumer will find the benefit. So I think borrowing has to be based on a need-based, it has to be a little pull-based, and it has to be more logical, and it has to be very controllable in the hands of the consumer. So which means that the consumer takes a lakh rupees, he should be able to return it very fast. He should be flexibly be able to create a plan on when all he wants to pay. He should be able to get the math on it. He should be able to get the interest rate and convenience on it. So I think it's a mix of 5 or 6 things. So I would really, if somebody's to sketch it, I would put a line for convenience. I would put a line for pricing, and I would put a line for rationale. And I would really play with these 3 equilibriums to educate to the consumer whether he should be borrowing or not borrowing.
Wow, I think that's a very honest answer, right? Because most of the times people would say that it's a no-brainer, you should borrow because you know that you're going to need some money at some point of time. But this concept of need-based, availability-based, and what is the rationale behind it makes perfect sense. This is really cool. Before I move on to the next audience question, let me kind of put in another one. While it is all through tech, what kind of people operations do you run, and how easy, difficult it is to deal with the consumers in this space when they reach out to you, when you onboard them? What kind of skepticism you see from their side, and while serving them as well? So what kind of operations do you run, and how difficult or easy it is?
Yeah, so I think we obviously, at a high level, we will have a large operations for KYC and onboarding, and then on the other side would be customer service. So these would be the 2 large operations, and typically we would have dedicated CS and operations for our different verticals. So US equities would have a different vertical, mutual funds would be a different vertical, deposits and banking would be other verticals. And our belief, and maybe we could be wrong, we're also learning some of it. Our belief is that we can best serve consumers through web-based help and on-demand calling. We don't find it intuitively right to have calling, because in calling there's a lot of telephonically data exchange happening, et cetera, which I think is not kosher. But that I could be completely wrong, right? Because there's a lot of debate on should we have toll-free lines or should we make it chat-based and web-based. So that's how we look at it. I think one thing which is very different from any business is that consumers really, really are impatient. They want resolutions like really, really fast. But we need to be at the same time realistic, because we are dependent on many third-party systems, third-party processes. So there's a lot of education process in the bargain, which we need to constantly do with the consumers. I would say that customer service and operations is at a much larger complexity in this space than e-commerce or any other consumer tech space. We pay a lot of attention to it, and we constantly building and constantly figuring out more automation and more systems and processes to be able to solve consumer queries faster.
Awesome. I think this is very interesting, and I'm like, and I've had some conversations wherein most of the tech companies spend a lot of time building tech or product, which was their core, right? But as you scale, the focus of tech or product on the customer service part or the customer part becomes equally important. I've seen some of the companies being ignorant about it, and then I've seen some companies being so passionate about it so that they focus on obviously automation, self-help, not the need to call or talk even, right? But obviously there are scenarios wherein you would have these issues, and then they kind of look at either through product or through a servicing team that you want to possibly build upon. And I'm sure that hearing your thoughts, the view is that you would possibly dedicate a team to solve that problem to with equal importance as equal to a feature coming on your product. Is that correct?
Yeah. So, we have a concept of OKRs in our company, and every product line of business has CSAT and NPS as an OKR. Am I saying we're like really perfect? No, I mean, we're an evolving company and we constantly learn and things are changing and we are adding things on the fly. But it's a huge focus we have a dedicated central team, and we have each LOB also focuses on NPS and CSAT. In fact, every quarter we hold a customer week in our company.
Wow.
But at the same time, again, getting these systems, processes, workflows to wow the consumers is a kind of a moat. It's not very linear. It is very complex. So to give you an example, there's a customer who's coming in. His name on the bank account is Kapil Kumar Sharma, but his name on our app is Kapil Sharma. And we obviously have automation to do fuzzy logic match. Now, in this situation, if let's say our automation system rejects, then it obviously reaches our customer care or operations. What should they be doing? What decision should they be doing? Because we do hold a lot of fiduciary responsibility, right, on this one. So those are things which we are constantly working and perfecting. Somebody comes in and signs up with a mobile number and says, I want to change my mobile number. Now, mobile number is the main identifier. So what should be the workflow for these? So these are things, like these are playbooks, Kapil, which have not been written. We're sketching a new painting here, basically. We're just creating a new playbook. I mean, these are two examples I've given you. There'll be 2,000 of these, which is obviously at some time overwhelming, but you can understand the intensity of the problem statements, right?
No, absolutely. I think this makes me even more, excited that I would certainly want to sometime, talk to you offline, talk to maybe your customer obsession team, maybe to talk to them and understand what is the thought process, how do they attack problems, and how they have been able to solve it till now, and what's the plan for future. And I'm sure that I'll bother you for that 200% after this coffee chat, write an email to you and make sure that you get me connected to the person. So that because I think it's a very complex problem. It does not look like a big one, but it is really a very, very complex problem, because as a customer, I would come and say that this is my right. I'm just asking you for a mobile number to get changed. Right. But there are various reasons, rationales behind it that kind of, are extremely, extremely, important. And I'm like, I can completely understand, because I remember we actually built an IP called CX First, which was largely to, cater to various scenarios. And I was doing it once for a customer, and I realized that this was basically a decision tree model. Realized that the customer's company was operating on close to about 330 odd scenarios. And I was overwhelmed by it. And I said, thank you so much. At least we built something through which we can at least know how many scenarios we are dealing with and how many scenarios do people on the front line need to use, right? So I think that really makes a lot of sense. I'm going to bother you for that. Moving on, because I think I can talk on for on, and but it looks like already 50 minutes passed. Maybe a couple of more quick questions and we should wind that up. Because I can see in the background, because there's a real background, there are people honking on your head looking for you. Right. So Mehak has asked that as far as Indian market is concerned, what is the trend that you see with regard to people making investments? Is it low risk, low return, or people are now moving towards high risk? And whether this customer persona is from a larger big town, or is it like spreading across to smaller towns as well?
Yeah, look, this is a good question. First, let me really share my perspective, and then I can tell you what the consumers are doing. So typically, what every consumer should always do before deciding to deploy their monthly savings is to do the risk profile and to definitely set up their goals. That listen, I need to do this holiday every year. I need to get married. And then when I'll get married, of course, automatically our engine will say that, listen, there's going to be a kid's education goal and so on and so forth, right? So what basically it does is it shows you that, listen, what would be your future cash flow needs, and tells you that what's your risk profile. And then an engine like ours obviously is aggregating your current investments also and savings. And then essentially kind of you figure out that what is the kind of saving, what that bifurcation is called asset allocation, right? It's like in simple English, it's like not putting all the eggs in one basket, putting eggs in multiple baskets. And it just is a very beautiful concept. Just like SIPs is such a beautiful compounding concept, same way putting money in multiple baskets is just a very beautiful concept. And that asset allocation system tells you how much money should you put in large cap, how much money should you put in global equities, how much money should you put in debt, mutual funds or bonds, how much money should you leave for fixed deposit for your emergency needs, and so on and so forth. So that's the right way for any human being to manage his or her finances. I think what we are learning more and more is that customers on a platform like ours love to do systematic investment plans. There is, of course, a lot of education about this concept that I just talked about, and it's an evolving process. And in that sense, we obviously see that as a company we attract more long-term investors. So which means that people typically would invest in blue chips, Nifty 50 index, large caps, larger products and brands, Reliance on one hand in India to Apple and Google on the other hand. So that's the thing. We don't have F&O type of traders on our platform. For us, our platform is very simple and clearly for people who are wanting to build wealth over the long-term period.
Wow. So what I'm like trying to process when it comes to investments, and obviously there are n number of options now open, and obviously one of the person here, the person has asked that when there are n number of options, that means there can be some real options, there can be some fake options, right? And when it is about finance, it is about money. We have seen the entire e-commerce industry going through that entire scamming episode. In terms of financial aspects, while there has been a lot of education which is kind of continuously going on, what kind of investments are you making as a business to educate your customers so that they know what is right, what is real, and what is not so real?
Yeah. Look, a lot of our investment in our goals engine. One investment is, we put videos and education seminars. I just feel that's just one very small dimension of it. And there are hundreds of content pieces on YouTube. There are people who have created online universities, et cetera, et cetera. So that's just one aspect. I think simplest aspect is, and I don't want to sell our product to people, simplest aspect is build your financial life on INDmoney's goal engine. I think it's really simple and powerful because that tells the consumers what they should be doing really. And last but not the least is that I don't think that there is any get rich fast formula out here, because if you get into the get rich fast game, you will also lose money fast. You have to do this in a very systematic and a very disciplined way. It's not that suddenly your 100 rupees will become 500 rupees overnight. That's not going to happen. And if it happens by fluke, that's not going to repeat. And finally, you end up losing. So, I think investing behind regulated products, investing behind products which have proper credit rating, investing products which are regulated by local regulators or global regulators, behind good companies, researching them properly. I think that's the key that people should do. At a simple level, I think ETFs and index is amazing, just amazing, right? Because at the end of the day, you don't have to worry about the underlying stocks. You just save a little bit of money behind an index all the time, right? Just it could be 500 rupees a week. It could be, 50 rupees a day. In fact, we're launching something called Mini Save very soon, where you can save your change from all your spends. Pretty interesting product which will get released. So I think one has to not really look for, when one looks at financial investments, one should not look for these big bang risky bets, right? I think that's a very different mindset. That mindset should be, if you want to take risky bets, build a startup of your own. You want to, or invest behind startups which you know of. I think those are good risky bets. 1 in 100 works, then you can of course multiply. But that too, you need to do it with 50, 60, 100 such assets.
Oh, absolutely. I think very, very interesting. And I think I should take a pause here, put the last one to you, and then we should close this coffee chat. INDmoney, focused on India or looking at going global? What's the future like? Next 2-3 years, what can we expect?
Yeah, so far the focus is India, because there's a lot of problems we want to solve locally. We've just covered, I think, 5% of our journey. Let's at least cover 30-40% of our journey where India chapter is concerned. Then we'll consider any other market.
Great, amazing. I think this has been a great coffee chat. A lot of awareness for people on how can you aggregate wealth, how platforms like INDmoney are kind of making it much more easier. I'm a customer myself, and I've seen this journey. I'm like, if not more, every week I just go and feel happy about what all I have accumulated, right? So, and what I've realized so far is it's not a 1 day or 1 week or 1 month or 1 year game. It's a long-term game, right? So, and for you to see the real benefits, you need to stay invested for long. So I think that's one thing from somebody who has never invested in any market, right? So, and still the subject becomes so much interesting because I read about Bitcoin when you started giving, loyalty points. And I, out of curiosity, asked somebody, hey, are you really giving me Bitcoins? Or are you just giving me a, kind of a pseudo equivalent value? And then obviously I got the response that obviously you cannot sell Bitcoins. You are actually giving an equivalent, focusing or following the market value. I think that was really, really good. A lot more points to be discussed, a lot of points to be thought of. I will personally reach out to you, have some more chats with you and maybe some of your team members, because it looks like there's a lot more being done at your end. And I'm sure that people have got many more questions, but we cannot take them all. Thank you so very much, Ashish, for taking 1 hour. I know how difficult it is for somebody like you.
It was fun. Thank you very much, Kapil.
Amazing. Thank you so much.
Take care.
Thank you so
Bye-bye.
much, everyone. See you next month. Bye.